like I'm not trading around the merge or anything like that, but I am kind of setting myself up to maximize profit around
That's
the
a good
merge.
distinction. That's a good
Yeah,
distinction.
and here's kind of what I'm doing. This episode is brought to you by Core, the brand new non-custodial wallet that offers a seamless and secure experience on Avalanche. You'll hear more about Core later in the show. What's going on, everyone? Welcome back to another episode of Empire. We got the Roundup. We got Santi. Hope you guys all had a really good week. We are 1 week out from the merge, so we're going to spend a lot of time talking about the merge, talking about how Santi and I have positioned ourselves. But before we do that, Santi, how are we feeling, my friend?
I'm doing great. Good to be here. How are you?
Good. What's I feel like you're in like a chipper mood today. I feel like you're in a really good mood.
No, just there's a lot of. I mean, it's kind of surreal that the merge is going to happen next week, and there's some good stuff happening today on the crypto side of things, and so yeah, it's always
Always in such a good mood.
what's not to be I'm in a
It's a
good
good
mood.
way to end the week, recording this thing.
I
Puts me
like
in a good mood.
recording the days that we record. We always typically record on Thursday. Thursdays are one of the best days of the week because you're closer to Friday. It just feels it's a nice day.
What is like your ideal week or ideal day? Like, are you in meetings? Are you investing? Are you like, how much time are you spending working? Do you like work out? What's like a day in the life of Santi?
Oh boy. Well, is this going to be an episode about that? Well, I don't want to make it an episode about that, but I typically like to reserve and carve out. The morning is just alone time, me time. I love to read multiple newspapers and then also what's going on in crypto and check, across a variety of sources, crypto Twitter and Telegram. And yeah, I keep the morning to just exercise and just reading and try not to have any meetings. And then I stack meetings most of the time, just talking to existing teams and new teams. And I've had a really good set of, over the last 3 weeks, I've been telling it, a number of times, but I've had really interesting discussions of teams building things that I've haven't thought about or just new use cases. And I'm like, oh, this is pretty interesting, like pretty crazy, pretty out there, but I'm always get really excited about teams that are, I think crypto founders or people coming into the space are not shy in their ambitions. And it's always really exciting to kind of see that even everything that's going on. So, yeah.
By the way, speaking of teams that we're excited about, I remember like 3 episodes ago or 2 episodes ago, we talked about a Web3 CRM. You remember that? We put out this like call to action. I was like, this should exist. So I got like probably 10, 11, 12 DMs.
Wow.
Looked at a bunch of 12 teams building this. Ended up getting on calls with 5 different teams. I'm gonna write one check. There's one team that was just amazing. I'll have to introduce you to them. But like what you can do with is kind of like a combination of, if you know, like Looker or Tableau, like these business intelligence tools. It's kind of like a Looker meets like a Zoom Info, like for contact discovery. So it's like Zoom Info meets Looker meets a CRM like Salesforce, HubSpot. It's really interesting. They're already working with a couple protocols. Yeah, it's really, really interesting. So that's
fascinating. Yeah, when you think about it, if you're a marketer, if you're someone that's not really deep into crypto, just think about it this way: like blockchains are super data rich, and the amount of information that you can extract from that and then take it and glean a lot of insights is going to be super explosive. Like, I think that a lot of people are kind of not realizing that. And from a marketing standpoint, if you're a consumer brand, then you can mint NFTs to your user base and then see everything else that they're doing is. And we talk about privacy here too, which is important. But as things stand, it's pretty crazy what you could do just by mining or just by looking and gathering insights from like Etherscan or some of the block explorers. It's awesome.
Yeah, exactly. There's we'll put a link in the show notes. There's this guy Tomasz Tunguz. I don't actually know really what he does, but he laid out.
He's a VC at Redpoint, I think.
Got it. Okay. He laid out. He had this good blog post on the Web3 marketing stack, the next big wave in crypto, and he kind of diagrams it all out from like the advertiser flows into the analytics, flows into segmentations, CRM flows into the segmentation. You've got the blockchain data infrastructure. So I don't think that these like building a crypto native Web3, I don't think they're going to be directly analogous to like, I don't think the next CRM for crypto is going to look like a Salesforce or HubSpot. But I'm starting to get really excited about it. So
yeah, definitely.
All right, so we got the merge coming up. We got the merge is predicted to occur between the 13th and the 15th. Are you taking any bets? Are you like, how are you positioning yourself? Or are you just holding ETH and riding it?
Yeah, business as usual. I think I'm going to leave the arbitrage and acrobatics and to more sophisticated players, which I'm not one of. And this reminds me a lot of there have been prior instances. And look, Robert from Compound has a great um, tweet thread that says, like, guys, beware, like, don't try to get cute or creative. There's going to be probably a lot of volatility, a lot of maybe actors out there that are going to try to scam you. Just my best advice, and I don't like giving advice, but in this case I will, because I feel like the right thing to do for like 99.9% of everyone out there is just like sit tight. Don't act on impulse. When things get out of control, and look, things can be, I don't think they'll be like super orderly, even though certain protocols like Aave have taken, I think, the right measures and steps, and we'll talk about what those are. But if you're just a normal user, just kind of like sit tight, because I feel like, and you've done some things, Jason, that you should talk about just for the normal user that you can do today. But in and around that event, I wouldn't try to get cute or creative around like trying to maximize and squeeze profit and try to like get the most amount of like ETH POW and then swap them for like ETH or USDC. It's just
Yeah.
yeah.
All right. I know you're not getting cute with it, but if you were to get cute with it, here are a couple things. No, here are a couple things that
Go for it.
I'm doing and that I think folks should probably be thinking about with their ETH, and spend some time this weekend, like kind of setting themselves up well. I actually don't think you really necessarily. I'm not trading around the merge or anything like that, but I am kind of setting myself up to maximize profit around the
That's a good
merge. And
distinction. That's a good
yeah,
distinction.
and here's kind of what I'm doing. So like the first thing is like figure out where you hold your crypto. So if you hold your crypto on an exchange, if you hold your ETH on an exchange, the first thing to do would probably be to check to figure out whether or not the exchange supports the fork. So again, as a reminder, ETH is going through this upgrade. It transitions from proof of work to proof of stake. After the transition, ETH miners can no longer mine. So what some miners are doing is they're forking ETH, keeping this proof of work version so they can continue mining. There are a couple things you can do to get the ETH proof of work token. So the first thing is you have to hold ETH on a wallet that supports the fork. So the easiest thing would probably be to have full custody of your ETH on like a hardware wallet, like a ledger. If you're holding ETH on an exchange, you may or may not get the fork token. So the first thing is if you are holding your ETH on an exchange, I think some exchanges are either already putting out policies or will put out policies on
Mhm.
whether or not you'll get the fork tokens. For anyone who remembers the Bitcoin forks of like 2017, 2018, you usually do like some exchanges. Like I remember Coinbase supported a lot of those forks in that they would they would airdrop you the tokens, but it would usually take like 3 or 4 or 5 or sometimes 6 months. So keep that in mind is even if an exchange
You would have
supports
lost out on pretty the time value of money there was high in that current
very
environment.
high.
There are
Yeah.
some exchanges that already have IOUs, and like the implied market cap of ETH POW is like 1 to 2% of the Ethereum market cap. So that if you back into that, it's kind of like 13 to $15.
Yeah.
Um, but yeah,
Yeah. So okay, so that's the first thing to do is like figure out where you're holding your ETH. Hopefully you know that already, and then figure out what the policy is. If you're holding it on an exchange, like are they going to give you that the proof of work tokens? The second thing is bridge all your tokens back to the ETH mainnet. So this is important. You are not going to get any ETH proof of work for your ETH that's held on like Optimism, Arbitrum, Polygon, any other layer 2 scaling solutions. It's probably a good idea to move back to the mainnet before the merge to get those ETH proof of work tokens. So that's the second thing. The third thing is probably unwrap all your WETH or WETH or I still don't know how to pronounce it. Wrapped ETH, WETH to ETH. There's there's probably going to be a DEX on the new ETH proof of work chain that will help you unwrap your wrapped ETH proof of work token, but like it's going to be probably a pretty unstable ecosystem. I would just unwrap it before the merge.
Mhm.
Um, I would unwrap it before the merge. So that's the third thing. The fourth thing is remove liquidity from protocols. You are not going to get any ETH proof of work tokens for ETH that's being used to provide liquidity. So probably a good idea to withdraw, unless you're getting crazy rates somewhere. You should probably withdraw now and provide liquidity again after the merge. And you have to assume there's going to be a big liquidity crunch on protocols. in like the coming week as more folks do this. So
To be
those are
fair,
like
that again, that might have some tax implications, folks. If you're using Aave, it's different than if you're using Maker and some other protocols. So, anytime you're yanking liquidity out of a protocol, this is not tax advice, but just bear in mind that sometimes it has tax implications, depending on your jurisdiction. So, um, yeah, it's important to.
Santi the tax man coming through for
Well,
you.
well, I
No,
feel
no,
like
it's
a
a
lot
good
of
call.
times,
No, no, it's a good
like
call.
if you're converting,
I finished my crypto taxes, and it was not
there you go.
not a pretty sight.
It's important. If you're, my understanding is, and we'll have to have like the token tax guys here to Zach who does great work there. And I've used them, and this is not a paid endorsement or anything. They've just helped me a lot. Is when you deposit your ETH in Aave, it gets converted into a ETH, right? And that is a token conversion event that is taxable, which is different than wrapping your token, which is not.
Yeah.
So just bear that in mind.
Is that what you use, Santi, for taxes? Is token tax?
I've used like the 3 different providers at once, but one of them was
Yeah.
token tax because again, like you want to compare and make sure that like it's very comprehensive.
Yeah.
But yeah, token tax is pretty good.
Okay, so those are the steps that I would do to set yourself up for success. It's pretty easy things. If you want to get cute with it, as Santi was saying, you could borrow ETH from Aave and Compound. So you're going to get there's going to be basically like a snapshot, I think. So you're going to get ETH proof of work for any ETH that's held during the snapshot. What actually a lot of folks are doing is they're saying, okay, there's going to be this snapshot that looks at how much ETH I have held at the merge. This means it probably makes sense to borrow as much ETH as humanly possible. Which is now starting to happen. You're seeing rates on Aave and Compound go up to like 30, 35, 40%. You can get cuter. You can like monitor the stETH to ETH market. You could buy or sell stETH as we get closer to the merge, depending on what the kind of so-called peg is doing. But now that's getting cute with it.
Yeah, well, that's the thing that is worth noting. I mean, we'll just jump to it. What's been happening in the STETH lending market is pretty interesting. This week, there was a big sell-off and spike in the Aave ETH borrow rates, and that puts pressure on the STETH peg because there's been, I guess, a number of market participants have been playing kind of this recursive leverage trade, which you deposit STETH on Aave, you borrow more ETH, and you buy STETH, and you kind of rinse repeat. But as rates go up, that puts pressure, right? And so,
Yeah.
it's just an interesting tidbit. Like the peg went down to, or the rate, I shouldn't call it just went down because it shouldn't be pegged ever.
Yeah, it's not a peg.
It's not a peg, but the rate, the STETH and ETH fell all the way to 0.95, and that's been its lowest level since kind of the fallout of Three Arrows kind of was having was putting, and after Terra was putting pressure on STETH, and it fell all the way down to 0.93. So this is the second lowest level since then, and it's hovering currently around 0.96, which I actually think is pretty decent rate if you think about kind of the duration and kind of the liquidity discount that these things should have. But yeah,
and you got to expect folks are selling stETH to get back into ETH right now, right?
Yeah.
So that means that will drive it lower. That'll drive stETH lower, which means there's probably a nice arbitrage play there.
Yeah, there's some selling pressure, on STETH. I mean, I think it's just interesting to monitor ETH borrow rates around this time. I mean, they went all the way, as you said, up to 35%.
Yeah.
So, monitor during this time. We should link to Robert Leshner's thread on Twitter, which is you probably should be really cautious around the new ETH proof of work chain. Most kind of big players have come out. This is like most exchanges from like Coinbase to Circle, like Center, Circle, Kraken, even OpenSea. Like most folks have come out saying we're not going to support the ETH proof of work chain. And so what is important is anytime if you are interacting with, say, and you can correct me here, but for instance, a lot of people might see this. Okay, you have 100 X amount of ETH, you get ETH proof of work. You go on to that chain and you say, "Oh wow, look, I have this. I want to, profit and sell these tokens." You're interacting in that chain. If you sign a transaction there, just be cautious what you're interacting with because a miner there might be able or wanting to replicate that transaction in the like ETH proof of stake chain. And so I don't know the exact kind of vector here that they could exploit it, but it's just important to like be really cautious and probably like sit tight and not do much.
That's a good flag, Santi, because okay, so you remember the Bitcoin fork? So you had Bitcoin
Mhm.
Cash, obviously. Then you get like all these other ones. You got like Bitcoin Gold, Bitcoin Diamond, Bitcoin. You remember Bitcoin
Yeah,
Hot? You had Oil Bitcoin, Bitcoin Smart, United Bitcoin, B2X, Segwit. You had
yeah,
Bitcoin Cash Plus. You had Lightning. You had all these forks, right? So if you like, okay, so if you hold ETH on a non-custodial wallet, you're going to be eligible every for every fork token, which is good.
mhm,
You think that's good. Uh, what is not good and where it gets risky is, and this might have been what Leshner was referring to, is uh, you shouldn't just go. A lot of people will be like, "Ooh, new fork things have just fallen into my wallet." There's going to be a lot of scams that people are basically
correct,
just dropping into wallets. So
correct,
don't just don't go just like claiming all the airdrops. There's probably going to be a lot of scams trying to get at signatures and keys.
correct,
Um,
correct.
and I know that happened in 2017 and 2018
Mhm.
with the Bitcoin forks, and it's 4 years later now. So I can only imagine how sophisticated some of these forks,
Yeah.
some of these scammers are going to be.
I mean,
So
probably the best course of action is hold out a bit, see what other people are doing.
yeah,
Don't be the guinea pig. Don't be in the front line. And if you want to, if you're holding it in your own kind of wallet, not in an exchange, then be careful when you're like transferring these tokens. But Yeah, look, it's going to be a very interesting time. The more I don't want to lose sight of the big picture here, which is, look, guys, finally, Ethereum is migrating to proof of stake.
yeah,
There's a big upgrade, was a Bellatrix update that happened this week of a lot of the clients. It was the last step, before the merge, and so all in all, really exciting. And we shouldn't kind of lose the forest for the trees, right? The most important thing
good
is
point.
I think this is a really good setup for Ethereum. Price aside, speculation aside, just fundamentally, this has been in the works for years, and I think it is a very positive transition to Ethereum and lends a lot of credibility, as we've talked about in prior episodes, on the narrative shifting. A lot of really institutions kind of taking now perhaps more actionable from the ESG standpoint. It's just I think really a positive step in the Ethereum camp.
Yep,
Which, whether it's correlation or causation, but it is pretty interesting that we are like 90% plus upside in Ethereum for the full flippening. The ETH BTC ratio has been on a tear, and it is traded to the highest level since 2018. And so, yeah, it's pretty interesting that we are closer to the flippening than ever. And the momentum, I think, is very much on Ethereum side. Now, a lot of things could be derailed. That there could be a lot of momentum traders out there, but nonetheless, I mean, I think it's difficult to understand all the factors that go into this kind of rally. But I think a big part of it is Ethereum is finally migrating, and a lot of people are observing that.
yeah. It's interesting that the the ETH BTC ratio. I've just got this pulled up on TradingView. Let's see if I can share it right here. It's interesting that this ratio is so high. Here you go. Is so high in the bear market, right? So if you look at when it got so high the last time, so it was up to, did it flip? No, what am I looking at here?
No, well, it
It went to
on the market cap basis, like it should never go to like the flippening doesn't occur at one. The flippening occurs on market cap basis, and so
yeah, yeah.
that is yeah.
So the highest it got was in 2017 in July, and then again in like January of 2018, right? So like right after the peak of the bull. So it's interesting now that this is happening like 9, 10, 11 months into the bear market.
Yeah, yeah, definitely. So I mean, look, I think Ethereum's market cap, fully diluted, current market cap right now is like 196 billion, and Bitcoin's is 368 billion. So
Yeah,
Ethereum is like at 53%, um, and so yeah,
yeah. Moving on from the merge.
yeah. I don't think there's anything else to discuss here other
Yeah,
than obviously we'll be covering a lot next week, but
yeah. Let's talk about. I don't want to turn this into the Maker show, but I do feel like there's a lot of interesting stuff happening on Maker right now. So I will continue talking about Maker, and if it gets to be too much, folks should just tweet at us or DM us and let us know. But I do think there's really interesting things. there is a Maker Coinbase Prime proposal. So Coinbase basically made a proposal for Maker to transfer 33% of Maker's PSM into Coinbase Prime's custody to earn 1.5% API on USDC rewards. That's 33% of the PSM would be about $1.6 billion. Why that's interesting for Maker, and why that probably makes a lot of sense for Maker, is because they've got all this USDC that they're not actually earning anything on. So if you look at 1.5% of 1.6 billion, that's an additional 24 million in revenue that Maker could be earning every year. Maker's governance would be able to freely mint, burn, withdraw, settle almost instantaneously in USDC. It's like 5 or 6 minutes, which is consistent with Coinbase Prime's standard offering. And yeah, I mean, I think so. Like this is what we talked about. This is what we've been talking about, right? There's this huge dichotomy, I think, in crypto right now between what I'd call focusing on decentralization maximization to avoid to become censorship resistant, with the downside of losing out on maybe some total addressable market that you could capture. The other side of the argument is just race to acquire users, capital, and just try to get as big as possible and maybe sacrifice some of the decentralization. And and we've been talking about this, and last week we said this is the biggest dichotomy in crypto right now, and this is such a good example of it, right? You've got some folks at Maker like, of course we should do this. This is an extra $24 million a year. It basically costs us nothing. And then other folks like Chris Black are saying, there's no way we should do this. We are getting away from DeFi. So I'm curious to hear your take on what you think of this.
Well, you're deeper in a Maker, so maybe I'll just ask a few questions and then I'll and you'll see where I'm going with this. Is like, what is, so I get it, 1.5% of APY, fine. But what is, like, does Maker have, okay, fine, it's nice to get 1.5% on this size, 24 million. It could go to a bunch of things, but are there alternatives? Like, what is being done with the PSM today? And could you be doing it and depositing in a way that is not using kind of, not going to Coinbase, if you will?
I mean, you could buy treasuries, but and get higher than 1.5%, but that's like less crypto native. That's more off chain,
Yeah.
But also keep in mind, like USDC is an IOU backed by off chain assets that is managed by Circle. So you're already, I think, okay, so you look at Maker, you've got look at the balance sheet of Maker. You've got like assets and liabilities. The assets of the liabilities of Maker are DAI. The assets are the PSM and the user vaults. The user vaults are users own those assets. Maker can't touch them. The PSM is Maker owns those assets. Maker can invest them, and they should probably only invest them in like really, really, really safe instruments like treasuries and bonds and things like that, right? And that's what USDC is in the PSM right now. I think the argument for doing this is that this is no riskier than just holding USDC. The current structure of the DAI that is generated from the USDC PSM looks like kind of, I mean, you're already using USDC, which is an IOU backed by off-chain assets managed by Circle, right? So I guess you are saying you're taking on the risk of, you're adding one more layer, which is Coinbase.
Yeah, the custodian risk. Which, by the way, the keys could still be compromised in the PSM. Like, there is risks of holding your own kind of assets and being your own custodian. There is a risk of Coinbase. Coinbase custody, I am curious because this came out and surfaced a few months back, which is, and I'm not sure if depositors in the custody accounts are like subprime, like meaning like they are not creditors of Coinbase. So if Coinbase were to default, they're like go bankrupt, you as a client, like a Maker, could stand to lose that if they're right, because they're technically like not a creditor, it's just like a client. And so I think like Armstrong came out saying like, yeah, our customers, like in a scenario where Coinbase were to go to bankrupt, like you are taking counterparty risk. And so, well, you are adding on that layer. But yeah, you're right. I mean, I think like you have USDC today that could be frozen if you, like, in an extreme scenario, whether it's in your own wallet or in Coinbase's custody wallet, doesn't kind of really matter. The only risk incremental here is some marginal kind of, some incremental counterparty risk, which is you have to trust Coinbase and their custody. Now, a third of the PSM is, I mean, it's not all of it, at least. So you're diversifying a bit. Um, and so I do wonder how much you're getting in those short term T bills that they bought not too long ago. But it's probably comparable, right? It's like not too dissimilar from this rate,
I
even though rates are
think
moving
it's
all over the place.
probably higher.
Yeah.
I think it's probably 2.5, or I think it's probably sub three, over two, somewhere between 2.5 and 3%. I would
APY?
have. Yeah.
Okay.
Yeah. Yeah.
Yeah.
Interest rates are going up, my friend.
Yeah. Noted. Yeah. Fully noted. The EU, the European kind of central bank, just hiked 75 basis points, which is
Yeah.
wild. Um, but um, but yeah, no, this is going to be interesting. Do you think it passes?
I think this passes. Yes. I definitely think this passes.
Mm-hmm.
Yeah.
Yeah. Do you think they're getting the best rate here? And could they negotiate with Coinbase to get a higher APY?
That's what I said. So I posted on the forum. I said, I like all this. This is great work from the growth team and from Coinbase. Really like it. Chris Black would probably tear me apart here and probably disagree with me on this one, but I was like, I like it. It's providing a bunch of revenue. I think the 1.5% is what I posted on the forum, is that 1.5% seems low. I think what someone might say to me is that maybe two responses. Who was it in the Discord? I said it's low too, and Luca Prosperi, who's great. Really like the guy.
Mm-hmm.
He's like, look, it's better than 0%. He's like, we got to do something. This is a good short-term solution until we figure out a better solution. And then some other folks said, look, where else can you get 1.5% still being crypto, kind of like crypto native, keeping it in the ecosystem.
Yeah.
So,
and my question here is, I'm unfamiliar, but when you invest in T-bills, they're fairly, I guess, fairly safe, or the safest in the risk spectrum, in the centralized risk spectrum, I should say. But do we have an insight into what Coinbase Prime and what they're going to be doing? Like, are they buying? What kind of assets are they going to be buying? And is it further out on the risk curve?
All right, folks, this episode is brought to you by our friends at Avalanche and Ava Labs. They have just dropped a new crypto wallet called Core. You're going to be hearing a lot about it over the coming months. You can now be one of the first to try it out. Here's the reason I'm excited to partner with them on Empire. Right now, crypto wallets and browser extensions, they feel clunky, they feel non-intuitive. That's why Ava Labs built Core. It's a free, non-custodial browser extension that gives Avalanche users a seamless and secure Web3 experience across the entire Avalanche ecosystem. Here are a few reasons to try Core. Here's what I'm experimenting with. Number one, Core has intuitive dashboards with a unified display for all of your NFT collections, all your crypto assets. You can execute asset swaps directly inside the wallet. It's a really nice experience. Maybe you want to earn yield or borrow against your Bitcoin, but you don't want to do it on one of those C5 platforms right now. Core's native bridging functionality makes it really easy to bridge your Bitcoin to Avalanche's robust DeFi ecosystem. Last but not least, Core makes on-ramping super easy. You can convert dollars to crypto right now using the MoonPay integration. Just takes a few clicks. Download Core today using the link in the show notes. It's really, really nice. If you are interested in the Avalanche ecosystem at all, you have to be using Core. Download Core using the link below. Now, let's get back to the show. Ooh, that's the best. That's the best question. That's the question that hasn't been answered in my mind, which is the most important question. So I would assume that the Coinbase, this deal is very close to some sort of like safe like T-bill investment, like Maker did. But if it's more like unsecured lending to crypto market makers, then I would change my entire mindset on this and I would not support it.
Yeah.
So I think this might have been answered overnight because I haven't checked the forum yet today, but I think that's the most important question. Really,
what would be interesting though is like, so, okay, fine. If this goes through and you're really worried about it, then you could probably hedge some of this exposure by buying like CDS or like shorting Coinbase stock or something on like Synthetics or some other platform where like, You know what I mean? Like you could use synthetics. I don't know if they support Coinbase, but like if you're really worried about counterparty risk, then you could probably do some sort of interesting strategy where you
Yeah.
hedge out some of the exposure, assuming it's not wildly expensive to do so, which I haven't run through this exercise, but theoretically, yeah, you minimize kind of counterparty risk. But I think we're coming into if you zoom out, I think it's more and more apparent that we are coming to some sort of big, I don't want to call it a fork in the road, but um, just kind of more towards this this kind of like philosophical standpoint meets like practical implementation and regulatory um, kind of policy, like regulatory compliance, if you will, which is um, I think, you know, the like I think a lot of, and this goes back to the episode that we recorded with Jake and Rebecca, that there will be a lot of more regulatory clarity. And even today, right, Gensler just kind of came out saying that my understanding was that the CFTC would be overseeing kind of Bitcoin and Ethereum, but he's also hinting or just further emphasizing the point that he's been making all along, which is a lot of other tokens look and feel like securities, and a lot of like service providers, exchanges, and all that need to register with the SEC and all this stuff. And so ultimately, um, yeah, like this is, again, I asked you this question in a prior episode, like what are the odds of like a regulator freezing USDC, not just in Maker, but like across DeFi, and what their motivation would be to do so. Um, and I think there's two camps. One of them, it says, look at what happened with Tornado. They can do that at their own kind of whim if they wanted to, and make, kind of shut down DeFi. But I think, I sort of feel that the tornado situation was pretty unique and specific. Um, and it probably doesn't happen unless there's a very clear kind of bad actor interacting in these protocols, which, yeah, I don't feel
I
like
mean,
it
I
is the
feel
case.
really we've been close with Circle since the very early days. Like we've known Jeremy and their team since the very early days. I what happened to Tornado is not just going to happen to Circle. Like they've got a huge regulatory team, a huge policy team. They meet with the regulators. I would I would assume every day someone on their team is talking to some sort of regulator or policymaker. It's not just gonna it wouldn't
Mhm.
what happened to Tornado would never happen to Circle. And that was just like you kind of wake up one day and like boom, action's been taken.
Yeah.
There would be I I mean, look, I could end up looking like a fool in a couple of years if that ever happens, but like I just really don't see that happening. Um,
Yeah.
it's not to mean that we shouldn't try to get more censorship resistant and like you've got this obvious dichotomy between like decentralization and creating censorship resistant systems versus KYC, AML, apply like work with regulators and basically try to capture as big of a market as possible. But
Mhm.
I don't see like them just freezing USDC. So
Yeah, I remember meeting Jeremy a number of times, and every time we met, he was like, "Yeah, I was just in DC," and this is like back in
He spends so
2023.
much time there, and like when there's a hearing and they need someone to come talk about it, like he's usually someone they tap. They tap Chad Cascarilla from
From
Paxos. Like there are
Paxos.
a
Yeah.
couple of these companies that are just very deeply embedded
Mhm.
into the DC scene.
Yeah.
So
Yeah, I mean, I think just around at this topic, I think in my mind, it is, look, in the extreme scenario where if the regulators want to, freeze USDC, they're going to do it, and Circle's going to do it, no matter if it's held in Maker's kind of self custodied wallets, multi-sig, or on Coinbase. It doesn't matter, folks. The heart of the problem is, if you believe it's a problem, is why are they holding that much USDC?
yeah,
Which this has been in the works since we first introduced the proposal back in March of 2020 to onboard USDC as collateral to bring more stability and scalability to the protocol. Now,
yeah,
if you don't like Maker, go somewhere else. You have
yeah.
options. But
By
it
the way,
is but it is, as you to quote you, it is one of, if not the primary backbone of DeFi. So everyone that isn't DeFi should be paying attention to this,
yeah,
because sure, you can use another protocol, but even Frax has USDC. Like the other
yeah,
protocols have and use USDC. It is the most kind of fluid used stablecoin out there,
yeah.
and it does pose a systemic risk.
let me just one more thing on why I think this makes sense. There are $5.6 billion in the of like stablecoin like backing, right? In the PSM right now. You
Mhm.
don't need all $5.6 billion to be fully liquid. And I mean, I'm
Yeah.
sure I'll get some pushback on that, but like a lot of the other stablecoin issuers kind of run this fraction. I guess I guess what I was walking into saying is like Maker should create a fractional reserve system, which is like the one of the biggest points of pushback about the traditional banking system. But like I don't know, like that's anyways. That's
Yeah. No, it's
I
you should
yeah
at least look. There have been some protocols that have been really hurt by doing poor treasury management, and others that have
yeah
been, in this case, Maker, kind of fairly conservative. Do something in the middle, but I think you know, earning some yield on your idle assets, like cash, stable coins, is probably a good thing to
yeah.
subsidize and finance ongoing
I just think that
operations.
the like if you look at the balance sheet of Maker, you've got the assets and liabilities. Liabilities are DAI, assets are the PSM and the user vaults. You can open up at least a small chunk of the assets to have a third bucket, which is like safe investments.
Hmm.
So, and by the
Yeah,
way, on the custody risk, you're really just switching custodians because if you already have, if you have
correct.
a bunch of USDC is custody like center via USDC is the current custodian of the PSM's underlying assets, I think.
Yes.
So you're really switching to Coinbase Prime is effectively just
I mean, yeah, the USDC is like an
switching
IOU.
custodians.
It's an IOU, and it's
Yeah.
center circle that like
Yeah.
maintains that ledger and can
So
freeze and update balances. So yeah, you're right.
on the Coinbase side of things,
Hmm.
Coinbase, I just got a alert. Coinbase is funding a lawsuit, actually. Um, Coinbase is funding a lawsuit brought by 6 people challenging the US Treasury Department's sanctions of the Tornado Cash smart contracts and asking the court to remove them from the US sanctions list. This is really interesting. This is written by Brian Armstrong. I'm reading this in real time. I'll ping it over to you. Um, why I think this is interesting Hmm. is because Coinbase is a public company and it's very rare, I would say, that you see newly listed public companies that are like already kind of pushing the boundaries of maybe what folks would say the company should be doing, right? There's probably some regulators who say that Coinbase lists uh, unregistered securities. And so they're probably under the watch the eye of the regulators already, or in fact I know they are. So it's really interesting that they're coming down and just saying like, look, this is what we believe in. I'm
Yeah.
still reading this blog
Yeah, I
post
was gonna
as
say
I'm
like it touches on a lot of people should go back to the episode we recorded when the tornado thing happened, which is my
yeah
observation was it felt like they were using like a sledgehammer where they should be using more of like a finer knife and tool. And in this case, the point that they're making is one, Treasury is using a hammer instead of a scalpel. Um, and there are, second of all, it acted outside of its authority, meaning Treasury is allowed to sanction people and their property, but Congress has never given Treasury the power to sanction open source software. And I think that is the primary, strongest argument here that it is probably unconstitutional to do so. It goes back to the First Amendment, which is if you're a developer and you're like, this is open source code. Um, and a more finer argument that they're making is more kind of this is stifling innovation, and I think it has made a big impact on a lot of developers in the space and how they could be treated. Because obviously, one of the Tornado Cash developers was arrested in the Netherlands and is still held, to my knowledge, by the authorities. And so, yeah, you know historically open source developers, I don't know, just developers writ large have been, it's pretty important to have the freedom to kind of write code.
yeah love this
So
move. A lot of respect. Good job,
yeah,
Brian Armstrong.
there's another good mirror post by Katie Haun, who used to be the prosecutor
Yeah, do you
at
know
the Department
Katie?
of
Can we
Justice.
have Katie on Empire?
Katie, if you're listening, we'd love to have you on. I have met her. I have interacted with her. I think she's very smart on these type of topics. Now runs Haun Ventures.
Yeah
But yeah, she has a good. I haven't read it. She argued more that it was like most people are focusing on the First Amendment. There's also another argument to be done on the Fourth Amendment, which I'm not an expert on law, but we should link it up in the show notes and then discuss it, and if perhaps even have her on to talk about it. But this is going to be a really big precedent. I feel like the more I've thought about like everything that has transpired on Tornado Cash and talking to a lot of developers out there, it's sort of like kind of reminds me of in the 90s where like the department, what is it, the DOJ or even the Department of Defense, like was pretty um at some point I think overacted in the sense that it wouldn't even allow like certain people to leave with like computers. Like if you were traveling outside the United States, I think you were not allowed to like at some point like take like pieces of hardware and computer, and because they would feel like it would like um yeah, they were pretty paranoid about it. And um yeah, I think there have been these instances where like the regulators or like the different departments have tried to block this sort of stuff, and then it ultimately kind of goes away. Um, but uh, but yeah, it's not
Yeah.
like the first, like everything. Like we try to put it in a historical perspective, and this is not the first time or the last, candidly, where like I feel like regulators might like clamp down temporarily or try to on pretty fundamental like freedoms, like freedom of privacy and freedom of speech and whatnot.
Yeah. Let's move past, unless there's
Yeah,
anything
yeah,
else. I want to talk
definitely.
about Binance, actually.
Yeah.
Um, Another company that's usually in the regulatory uh, eyes is Binance. Starting September 29th, Binance will automatically convert all USDC, USDP. What is that? Paxos? USD Paxos? And TUSD. Anyways, Binance is converting their stablecoin balances basically into BUSD, which is Binance's stablecoin, which is
Mhm.
really just a white labeled Paxos coin at a 1-to-1 ratio in order to enhance liquidity and capital efficiency for users. Users will still be able to withdraw their chosen centralized stablecoin. The amount will simply be deducted from their BUSD balance. Binance added
Mhm.
that USDT is not one of the stablecoins involved in the auto conversion initiative, but they didn't provide a reason as to why.
Yeah, I think there's some really good takes by the founder of Wintermute, which is a big market maker,
You have Jenny?
and yeah, Evgeny, and even Jeremy from Circle. They all seem to suggest it's a positive thing, and I tend to agree, which is you're leaving essentially the role of arbitraging to a market maker, but improving liquidity of BUSD. If there's a discrepancy between the peg, then a market maker is going to step up and capture that ARB fairly quickly. And so there's kind of no reason. And this is a point that Evgeny made, which is like if when you have too many pairs, it fragments liquidity, and so it's a more inefficient kind of market. And so you're by removing a lot of these pairs, you consolidate liquidity, and then it just makes the market maker's job easier to arb that perhaps discrepancy in the peg and make the markets more liquid. Um, and so, yeah, I think FTX does something similar, right? When you deposit a stable into FTX, you're basically depositing, um, like if you deposit USDC in FTX, um, it has it is a basket of different stablecoins except USDT Tether. But for the most part, it's just yeah, it's like consolidated. And then depending on what you want to redeem, like withdraw or trade on, like you which pair, then I think that's when it just consolidates the liquidity, and it's probably net positive, or it is net positive.
Is Binance taking a swing at Tether here?
No, I think this is also consistent with how FTX does it, right? Which is Tether has always been in a category of its
Yeah,
own.
but FTX doesn't have their own stable. Binance has their
Yet,
own
at
stable.
least. But yes, yeah.
Yeah.
I'm not reading too much into Tether other than Tether, I think, is just a stable coin that is, just treated differently. Certainly, like US regulators have always had it in, it's not the same as USDC, let's put it that way. And so, yeah,
This is total Tether FUD, but
it's not.
one
Well, yeah.
no,
Well,
what
yeah.
I'm gonna say, what
What
I'm
are you
gonna
going to
say
say?
is
Yeah.
what you could make the argument that Binance is like taking a swing at Tether and that they'll try to like hurt Tether with this. But because eventually, if Tether gets hurt enough, Binance has enough capital to come in and basically bail out Tether. This is total Tether FUD, by the way. I don't think this
No.
is going to happen. And then if Binance was behind Tether, like that is just so powerful. Um,
Well,
that's Tether
Well,
FUD. We can move
that's
past
tether
the.
FUD, which is there's always tether FUD. I mean, Jeremy said something similar, which I mean, not FUD per se, but just his opinion, which obviously he's biased. But Binance is trying to consolidate dollar liquidity with cash equivalent stables. That's good for liquidity and market depth. USDT is not cash equivalent, not even close. Full stop, period. So, anyways, time and time again, Tether has come out with reports of what is backing Tether and what have you. So I'm not going to comment or make an opinion. People can go read and inform themselves on the matter. And if you do want to talk about it or have an opinion, just comment on YouTube, as a lot of people do.
Who's your favorite data provider, Santi? Did you guys use everyone, or did you use like Kaiko, Amber Data, Coin Metrics? Like, do you have any favorites?
Good question. I like in no particular order, but Coin Metrics is a really good newsletter and just provides really nice charts. Um, in network data visualization. I'm a big fan of what they do. Misari has good charts. I haven't looked closely at yours, but I assume you guys have as well. Fairly new. Don't kill me for saying this, but the block has good DeFi charts. Um, who else? Nansen, paid, but yeah. The first ones that I said are, with the exception of maybe you guys and others, are they have different tiers, but a lot of these are free. So
yeah.
How about you?
You'll see what we roll out in like a
There we
month and a
go.
half. So
There we go.
That's my plug. Yeah, we've been building a bunch of data stuff in the background. So
Nice.
yeah,
Nice.
there's my
There
plug. All right, man. I want to bring this guy Doug Colkitt on. He keeps having these. I don't know if you read Garrett's notes that he wrote for us, but Doug keeps showing up in the notes, and we keep not talking about it but Garrett is right. Doug keeps making these interesting arguments, and the argument this week was that he argues that today's completely free floating gas means that prices keep falling until supplies clear. I think he's basically saying that there should be a fee floor price on L1s.
I mean, the question just now on the first jumped at me was, well, it is possible that at this early stage of a lot of these L1s that some might be even subsidizing block space to attract, to make it artificially drop fees and then convert users, and then over time, let it be more of a free floating market, and stop subsidizing block space. But that may be a totally inaccurate and incorrect statement. But
I think it comes down to the big question of value accrual, right? Like we were talking about one of the big dichotomies or questions in crypto right now is like decentralization and building censorship resistance and sacrificing maybe addressable market. On the other side of it is basically racing to acquire users, make as much money as possible. Another big question in crypto right now is like basically just what part of the stack is value going to accrue? Is it going to accrue to the settlement layer? If it accrues to the settlement layer, does it accrue to L1s or does it accrue to L2s? Or will it accrue to apps? Or does it accrue to aggregators? Which I don't think many people think aggregators. It's really between apps versus settlement layer. And I think it's really between like L1s versus apps, I would say. But I think that's one of the big questions.
Yeah, definitely. Well, let's add to future episodes where we bring on Doug, and potentially Katie or Jeremy. Would be great to have, actually.
Santi, where do you think value will accrue in the next cycle? Settlement layer or app layer?
I tweeted about this. I put a poll yesterday, and we can link it here, which is I asked what part of the stack will accrue the most value in the next crypto cycle. And the different options were settlement layer, which includes L1 and L2, apps, which would be like DeFi games, etc. Aggregators, mostly I'm thinking like wallets, and or other. And there are 25 minutes left in the poll. For now, it's an overwhelming 46% say that it will accrue the most on apps. Whereas historically, it's been mostly the settlement layer, meaning, the L1. Now, I'm sort of split. I think apps, more so than an L2, because it's really exciting what's happening in L2 land, optimism, or particular Arbitrum. I think L2s are going to, over the next I was going to say 8 years, but for the next cycle, L2s are really going to shine because I think it's going to coincide nicely with really good apps that are coming out and support a lot of users. But my overarching thesis is that what I look to invest the most at this point is investing in one application that is going to capture and probably build out other parts of the stack. So look at STEPN, for instance, and people that want to learn more about it should go to our episode. And full disclosure, I'm an investor in STEPN and I'm an advisor. So take all of this with a grain of salt. But nonetheless, the point stands. They have created a really, nice application which allows people to earn NFTs and um, this by walking and exercising. And they've onboarded a lot of users. And they've first were deployed in Solana, and then they migrated to other chains because they were they were just kind of breaking Solana. They just had a lot of traction. Um, since then, they captured all this attention and all these users. They've now rolled out their own marketplace, and they're now the most popular DEX in Solana. And so, what's to stop them from continuing to build out other products? Meaning, they already have a
Like
wallet.
they build their own wallet.
They already
Oh,
have their wallet.
they do have their own wallet.
Yeah, I
Yeah.
mean, they have their application, so
Right,
essentially
right,
it's a
right.
wallet and the marketplace. And what's to stop them from building their own chain? Like DYDX ish type also doing this. So the way I characterize this thesis, the WeChat of Web3, which is like WeChat, there is going to be someone that probably just kind of captures all these users and attention, and then can build all these different parts of the stack. Everything's open source, so you can just fork it.
Yeah.
So I think so that leads me to invest in an app that captures a lot of users and attention, probably a game, and then that allows you to do so many other things.
Yeah. That's all I got today.
You? What do you think?
I could make I think that in the next cycle, it's still going to be the settlement layer. I think you know, I need to think about this more. Last week I told someone it was going to be the app layer, and this week I'm saying the settlement layer. So there's my minimal conviction bet. But I
Well, it's
think
okay to change your mind. It's fine. Yeah.
yeah, I don't think I have conviction yet on
Yeah.
anything. The fun contrarian bet thing would be to say the wallets, because
Historically, user aggregation theory and read
well,
Ben
they're the only
Thompson's
one who
trajectory.
owns they're the only one, like no one owns really. It's very tough to own the user, right, in crypto, but they're the only one who really owns the user. Like once you start using MetaMask, you could flip between Compound and Aave really quickly, but like you're still staying in MetaMask, They just make no money.
Yeah.
They make very minimal money as things scale.
MetaMask makes good amount of money. But
That's true.
like
MetaMask does,
MetaMask
but
swap fees.
yes, they do, but those fees will trend towards zero.
Ish. Yeah. I guess what you're seeing in exchanges is like a lot of fees are just are going to
Yeah.
zero.
Well, this was our argument about Uniswap like a month ago. I think most fees end up trending towards zero in financial markets.
Yes and no. Yes and no.
I know what you're going to say, which is there's always a fee, but it's either on the front end and the user knows it, or it's on the back end and it's payment for order flow. Yeah.
Exactly. Yeah. Yes.
Yeah.
Fees. There's no such thing as a free lunch.
Have you looked into Rook Finance, by the way, Santi? Do you know Rook? Yeah.
Yeah, but it's been
Rook?
long for a while, right?
Yeah, I had no idea that they were even still around. I talked to their team last week. They are really interesting stuff. Like when I think about like MEV, I think Flashbots immediately, but the Rook team's doing interesting stuff. I have no affiliate. I don't even know if they have a token. I have no affiliation.
They do. Yeah.
Okay.
This is the team that was the Ren team, I think, also spun out and then ended up being acquired by someone else.
Pretty interesting what they're doing. The reason I bring them up is because it's kind of like the payment for order flow model.
Yeah. Before we go, there have been some pretty interesting rounds lately, which suggests that the market, at least on the private side of rounds, is pretty healthy and strong, and a lot of the private capital is being deployed. I'll just point out a few here that the first one.
While you're pulling it up, Santi, did you invest in Chaos Labs?
Yes, I did.
They are on an absolute tear right now.
I was fascinated. Look, thematically, they're
like a gauntlet, yeah.
Kind of like a gauntlet. Super smart, ex-Israeli intelligence unit folks, founders, and they are building tools like Gauntlet to do real-time simulation and stress testing DeFi. And when you think about it, like there should be more sophisticated tools. Like DeFi and blockchains just generally are like really data rich and transparent environments that should allow you to do really interesting data modeling and simulations. And yeah, I was an early investor in Chaos. Shout out to Omar and the team there. And they just put out a proposal they've done some really interesting work on creating a dashboard for money markets like Aave to monitor in real time the different collateral positions and what's at risk, and allows you to do simulations. And I played around with the tool. If what happens if the price of SD drops below 0.96, like what does that do? Like cascading, and do simulations of like cascading liquidations and whatnot. And yeah, it's pretty cool tooling that they've developed. And these are the type of projects that I think are going to push us towards more mainstream adoption, because if you're a more sophisticated financial player, as the market matures, becomes more competitive, and these protocols are transacting more value at risk, then it's pretty awesome to be able to, like, in real time do these simulations. And it's the type of tools that I think DeFi teams want, B, investors and users want, and also regulators. Like
Yeah.
regulators track like capital efficiency ratios and like solvency ratios, like Basel rules 1, 2, 3 or whatever. Uh, to basically, like, if you're like a depositor in some of these banks, you want to understand like what that the bank is like not doing crazy stuff as they were doing like in the financial before the financial crisis. So again, I think these are the type of tools that make DeFi a better, safer, or work towards making it a better, safer environment.
Yeah. Tell me about the rounds, then we can wrap with that.
Yeah, well, the biggest one is this Mysten Labs. So the creator of the Sui blockchain, um, they closed a $300 million raise led by FTX Ventures that
Oh
valued the
damn, I missed
protocol
that. Oh, that was
at
today. Wow.
2 billion. That was today, yeah. So
Did
these are
you?
like, again, competing L1s. So it's
Yeah.
Aptos and Sui, I think, are the ones that are mostly kind of talked about now. But yeah, valuing the company at 2 billion.
And
So
they're out of Facebook, right? This is the
former
former.
Meta executives, yeah,
Yeah.
Facebook executives. So Aptos is probably the most kind of direct competitor here, if you will. Also, ex Meta employees, like Novi Financial, what was called. So yeah, pretty interesting. And I think the valuations are fairly comparable, if I'm not mistaken, because Aptos raised for another $150 million round, bringing it to total of 350 million raised this year. So again, people might these are not small numbers.
Yeah.
And for anyone listening, it's like, it's pretty, the dilution's not much, and the question is, why would you raise that amount of money? And I think if you could do it, you probably need a big war chest to compete against existing L1s, and from a BD standpoint, attracting developers, that's not cheap, right? And so I think, yeah, we'll see, but it's fairly interesting. There have been other rounds, not at this scale, but I feel like the private markets have held up nicely and are, back. There've been a number of, funds. I think the amount of dry powder, I don't forget the figure exactly, but there's a decent amount of dry powder, um, of funds in crypto that have raised recently, that are deploying and
Yeah.
backing the next kind of startups.
Yeah.
So
What about I have a couple others.
yeah,
21
go for
Co.
it.
Immune, Hani's great. Known him since the early days. They just raised now a unicorn, Credix, which is bringing real world
Mhm.
assets
That was led by
online.
Verify, I think.
Yeah, focused on Latin America.
Yeah.
They just raised 11. Fuel Labs raised like 80. Yeah, a lot of raises.
Yeah. Absolutely.
What is
Before we go,
Hubble? What is this Hubble protocol?
like
5
censorship
million?
resistant stablecoin that Multicoin invested in, 5 million
Just
round.
Multicoin. Yeah, just Multicoin then?
Multicoin and a few other folks. Yeah.
Interesting.
Yeah. Oh, Animoca raised another, actually today, Animoca raised another 100 million or so.
Well,
And it was like
I don't
GVC or
get I
something.
don't get Animoca. I feel like every 3 months they just raise another 100 million, and then they use that money to go invest in all these
Yeah.
early. They're just
110. Yeah. They've invested in 150 companies.
they're a
Uh,
holding company now.
they're a holding co. Yeah. So it's around $110 million round led by Temasek. Um, and a few other investors, which I like VC firm GGV Capital. These are pretty smart guys, I think, in the consumer land. But yeah, I think it's sort of like to give them more capital to invest,
Mm.
and continue to. I mean, they're. I think their sub is like Sandbox, and like they've invested in early in a few kind of notable projects like Axie and a few others.
Yeah.
So they're everywhere, really.
Anything else? Or you want to wrap, sir?
No, before we go, any book or movie recommendations?
I have a podcast recommendation actually, which
It can't be
is
Empire.
it's not Empire. It's a non. Well, I have two podcast recommendations. I have to plug Bell Curve, which Mike and the guys at Framework just launched. Vance and Michael at Framework, really good show. The other one is a non-crypto show, which I've been trying to read some non-crypto stuff, which is Tape Notes. Really interesting. So this guy in the UK, he basically sits down with a bunch of artists who I like Flume and Imagine Dragons and Fred again and and Chainsmokers. Like he'll basically sit down with all these like DJs and musicians and bands and basically just like dig deep into their recording process and like how they build albums and how they came up with the album and like where their inspiration came from. And, like gets really nitty gritty and he'll like play songs on the podcast and then you dig into the songs. It's really good. So I would recommend Tape Notes. That's my content of the week.
Interesting.
Yeah.
I will plug, I guess, for the sake of diversity, a book. I think I mentioned The Network State by Balaji. It's really good. If you don't want to read the book, just go listen to his podcast. Um, the other one that I'm reading and almost finishing now is Matthew Ball, The Metaverse. Matthew Ball's book, recent book called The Metaverse. It's pretty good. It says the metaverse, the metaverse and how it will revolutionize everything.
Oh
It's
yeah,
not,
we had. Oh no, you weren't on that. Matthew
we
came on
had-
the show actually, but you weren't on that episode.
yeah, but it's fairly good. It also reminds me of one of my favorite books, which is How the Internet Happened, which lends a lot of really good perspective on the evolution of the internet. And so, yeah, go check that out. The metaverse is pretty cool.
Cool.
I'm enjoying it.
Nice. Did you watch the psychedelics thing? How to Change Your Mind on Netflix?
Partially.
Nice.
I haven't had much time for TV because
Check
I'm
it out.
starting something new, I think.
Oh, there's the alpha. I've been waiting for you to release that.
I got to sprinkle some, but yeah, I'll TBD, but in the works.
Yeah,
I'm excited.
In the works.
This has been me frustrated.
You want to say more? You want to say more or next time?
It is related to one of the things that I think we can do better as an industry, which is better security. And until we have more hardened security to protect consumers, I think is the most critical piece. A lot of people talk about more regulation in the space, and it concerns them and worries them. And I'm channeling that energy to building something that I think will be net positive to push the space forward. And it is around bringing more risk management solutions for crypto.
We'll have to
So
share more
I've actually been
later.
tired of like telling this idea to so many people that at some point I'm like, all right, you know what? Time for me to just do it.
We'll do an ep on it someday once you're ready to talk about it. So,
Yeah,
but you've got
3 years when it's live.
Exciting. All right, man.
Awesome,
Well, enjoy the
guys.
weekend.
You
Enjoy
too.
the rest of the week. Hope everyone has a great weekend. We'll see you next week for another episode of Empire.